What do you make of these numbers?
Yeah, for us it was a 6% miss. Consensus was obviously too optimistic, as we've seen a number of cases. For what's key in my mind is that provisioning is spiking substantially. We estimate, because we have to break it down from the cost that they provide, 167 basis points, which is the highest in the Saudi sector, up from 59 basis points just a year ago. For the sector as a whole, we expect it to hover around 74 basis points for this quarter.
Okay.
So it's a big increase in provisioning that we see.
What about the broader banking sector as a whole? Because this is something that we've been looking forward to for quite some time. 8 out of 12 Saudi banks on the watch list here on the Bloomberg have reported. What's your key takeaway on a more industry level?
Well, provisioning is not spiking across the board. That is a bit peculiar. But for Saudi British Bank, Linma Bank and Arab National Bank, we've seen quite significant increases in provisions. NCB is standing out. Part of that could be the capital gains they had actually in the quarter to actually provide a cushion to the provisions. But NCB is clearly outlier. Part of that could be the Turkish exposure as well. It doesn't have to be Saudi, because that's where 44% of the non-performing loans are sitting, which represents about 11% of the loan book.
At the top of the show, we brought up the chart which showed the increasing interbank rates in Saudi Arabia. The liquidity pressures are still very much there. Yeah. That's playing into the cost of funding for a lot of these banks. How concerned are you by the SAIBOR levels at the moment? The Saudi Arabian Monetary Agency appears to be trying to ease those pressures. What needs to be done to really make progress here and bring those numbers down again?
Yeah, for the banks, it's actually not a bad thing. Actually, you see margins stable, actually improving year over year, as opposed to the rest of the Gulf, where we see margins coming down 20, 30 basis points. So the rest of the Gulf, you see top line actually very subdued, 1% growth maximum. So a lot of Gulf banks have to manage their expenses very carefully. At the same time, provisions go up, so you see earnings coming down. For the Saudi banks, margins are stable, so they're actually enjoying these higher rates, which is kind of counterintuitive, but that's what's happening. But actually, SAMA has been doing the right thing, but hasn't done enough. So providing liquidity to banks is one thing. To push the government to do international bonds, another thing. But I think more needs to be done. For example, the restrictive loan-to-deposit ratio, which is set to be, has to be 90%. Yep. A lot of banks are close to that hurdle, so they're bidding up for deposits. In my mind, that should be let go. You need to include, let's say, senior bonds in that ratio. International bonds are very important. You don't want to tap the restrictive liquidity in the domestic economy. You need to actually tap foreign markets.
How much of that is a promise for Saudi banks, international bonds, and tapping into that market, as you said, Jaap?
It's not so much an opportunity. I mean, the global banks are all over the issuance. So in terms of fee income, that's not going to be that massive. It's just a matter of, let's say securing the drainage of the liquidity, stemming part of that going forward.
Yep, I've brought up a chart which our viewers can pull up as well on their Bloomberg. This shows the Bloomberg GCC 200 benchmark index on track for the second decline this year. How do you make money here? Where's the opportunity?
Well, there's only a few opportunities. If you're an emerging market fund manager, I think there's a lot of opportunities in China. China is doing a lot better than expected. A lot of Asian economies are doing better than expected. You see a rebound in Brazil and Russia, for example. And the Gulf is definitely lagging behind. Having said that, there's always opportunities. And this environment is ideal for mergers, in my mind, because it's not a severe stress scenario. Yeah. It's just a material slowdown. For example, UAE, we're talking about a 2.6% growth rate still. Yeah.
And you have a specific merger that you have at the top of your list, right?
Yeah, for me, UNB is an obvious target. I mean, after the NBAT FGB merger, you have the Mubadala IPEC merger, you have two offshore oil companies merging just last weekend, actually. I think UNB will be next. If you look at the price to book, UNB is trading at 0.7, ADCB is trading at 1.3. So it's trading half of the price to book of ADCB. So obviously that is extremely attractive for an ADCB to contemplate such an offer. They can take the view as, let's say, let's wait for 2 years for the NBAT FGB merger to work its way through. It will take a year to do it. It will take a year to integrate it. And they may take the eyes off the ball. Yeah. But actually, it's 2 years that you can sit back, but you probably be preemptive because this company will be a powerhouse, will be the biggest, as you said, in the region, with very low funding costs, and they can outcompete everybody. So they're going to get a lot of market share.
Yeah, but I want to ask you about Aramco. This is a very closely watched potential IPO here, and where they're going to list is one thing, but just what the impact is going to be for the region.
Well, the impact is quite material. For example, it makes a lot of differences for the indexes. If you include Aramco, the representation in the MSCI and FTSE will be a lot more significant going forward. So it really puts Saudi Arabia on the map for global investors. I think that's the key difference.
Okay, and what is the impact or the fallout or the ripple effect, would you say, for Saudi Arabia and the rest of the industries, including banks, if any?
No, obviously it is another venue to create liquidity in the system. So rather than launching international bonds, you're trying to tapping foreign markets. Let's say bringing in dollars in the economy is going to be quite helpful to stem the liquidity drainage in the system. So that's the biggest advantage. Obviously, you give also up some of the significant revenues of Aramco by IPOing part of the company. Right, so revenues will also be lower. So it's not a full win-win scenario.